Hello traders and welcome to another video review. Today is Friday, the last day of July 2026. Let's take a look at the Forex economic calendar for today. So what do we have here? First off, we got some bunch of data from the Japan. Those are medium important data. As you can see, those are mixed bag of data. Some of the data at industrial production beats the expectations. Some of the other data like retail sales are typically below the forecast or even the previous number. PPI data in Australia 1.3% beats the expectations. Manufacturing PMI data from China down from 50.3 to 49.2. The same situation is with the non-manufacturing PMI. So overall, the Chinese composite PMI data is down from 50.60 to 49.3. One of the most important events over the night is the Bank of Japan interest rate decision and monetary policy statement. As you can see, interest rate decision has been published early morning. Bank of Japan decided to leave the interest rate at this level of 1% as it was widely expected, basically, right? I'm just looking at the next data. As you can see, one of this most important data is Bank of Japan press conference scheduled for release at 8:30. We have some data from the Eurozone, from core CPI and CPI at 11 o'clock. This is the major data release. Italian CPI, Polish CPI, French CPI data are scheduled for release before that, and German unemployment rate and unemployment change is scheduled for release at 5 to 10. At the end of the day, we have the data from the USA, employment cost index at 2:30 from Canada, GDP from Canada at 2:30. Then we have some data from the USA as well. Chicago PMI is scheduled for release at 3:45. Michigan 1-year and 5-year inflation expectations together with the consumer expectations and consumer sentiment data are scheduled for release at 4 o'clock. And Baker Hughes oil recount and total recount is scheduled for release at 7 o'clock. So that's about the Friday, quite busy day, end of the week, end of the month as well. So we might see some increased volatility, especially after that important bunch of data releases that we have witnessed this week. So without any further ado, let's switch to the charts and we start with euro dollar. So the euro dollar continues to move higher. We are back inside of this let's say blue channel. We almost hit the upper channel line. I'm talking about the blue one, and we almost hit the upper yellow line. I'm talking about the big descending channel. So right now it looks like this. So it's all quite nice situation for the bulls, right? We retraced a lot of to the upside. Local high 1.1538, and now this level here 1.1473 will be acting as a technical support, and the other one will be acting as the technical support 1.1507. So what we should see now is some sort of the pullback from the extremely overbought conditions, test of this technical support, and then movement to the upside. We will see whether this market will break above this channel or will stay here where it is right now. For now, bullish, short-term bullish bias. The same situation is on the cable. We hit the extremely overbought conditions, and we hit as well the technical resistance at 1.3456. The next target is 1.3485. So we are out of the channel right now, and we are trading, as you can see, quite aggressively to the upside. This is the previous blue channel level. So yeah, we will leave it like this right now. We are out of this that was the yellow channel, that's the blue channel. Nevertheless, it looks like this market doesn't want to move inside of the channel, or doesn't actually respect the channel. So we are going to remove at least this channel here because it's not necessary to have it. That was the old channel. We are extending it to the newest data, so it looks like this right now because of this swing high. This is too steep to produce any source or any kind of a nice channel. The technical support will now be at 1.3358, 1.3383 and 1.3392. So that's the technical support as well. Extremely overbought market conditions. We will see what will happen next. For now, bulls are in charge of this market. I guess they retrace more than 50% right now. US dollar versus the Japanese yen, big movement to the downside after our target was missed. So no projection level. We hit like 50% of this projected level. Local high 164 will now be acting as the technical resistance and swing high. So let me just play with the levers, so you can see, guys, that this situation here to the upside is now very limited. So this is the technical resistance and the swing high, thick red line. We broke below this technical support levels. Very strong reaction, as you can see, to the downside. This is nothing uncommon. This is something we should be aware of, because this is how the market reacts when something is basically not in line with the expectations. Look at this movement to the downside. Big movement to the downside. Big, huge candle to the downside. After failure to continue the breakout from the triangle, this movement to the downside is even stronger than this one. But local low was 158. There you go. But then there was a very nice bounce towards 160.89. So very big volatility today on the US dollar versus the Japanese yen. We are waiting for the Bank of Japan comments. We are waiting for the Bank of Japan press conference. So please stay focused, stay vigilant. The volatility might not be end just yet. The gold market doesn't do much. The gold market is still inside of the range and it doesn't actually look like we want to do something about it. So there is nothing to talk about. On the other hand, S&P 500, very nice movement to the upside. As you can see, we do not respect this channel anymore. The blue one. We are back above the golden trend line. Momentum is strong and positive, 60 points. We are about to challenge the local technical resistance 7,489. Any breakout higher opens the road towards this level here, 7,525. So we might witness, after the Fed interest rate decision and press conference, a very nice V-shaped reversal, mostly stimulated by the Bank of Japan situation, interest rate decision, and of course the statement. So volatility is very high on the S&P 500 these days. Crude oil is coming off the elevated levels. We almost touched the lower gap line on the 4-hour time frame chart. It looks like there is some sort of the bearish pressure waiting for this for the price to come towards this level, and now the market is reversing lower. Momentum is negative already 40 points, so current price 81.73, and there is a chance that we go even lower, below the level of 80 by the end of this month and the week. So the crude oil looks very heavy and the Bitcoin doesn't do much as well, just as the gold. We just bounced towards 75,000, then reversed. There is a red candle here. Nevertheless, we still trade inside of this range. Not much happened. Very limited trading these days on a Bitcoin. No hype, no FOMO. Nothing is particular is going on this market. Nothing really with typically exciting for the traders. No trend. Basically, we haven't seen nice trade for the whole month. We haven't seen a nice long-term trend continuation. Any kind of this kind of opportunity has gone. So right now we are oscillating around the level of 50 on the 4-hour time frame chart. Occasionally going to the extremely overbought conditions, sometimes towards the extremely oversold conditions. No trend is right now visible on this market. In the background, obviously, we have a strong sell-off, but this is typical corrective sideways trend, and the sideways trend continues inside of the range. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.